comment the other day about different kinds of loans being available out there. And it was in response to my story about getting an application where the person wrote down her own information, but then submitted her husband's documentation for income. In a conforming loan for a residential property, 1 to 4 unit, when you are working within the guidelines of Freddie Mac and Fannie Mae, the person on the loan needs to be the person who is earning the money. Now, you can get external funds for your down payment or closing costs. For example, you can get a gift from a relative. You could get a grant if you qualify for one. You might get a down payment assistance program that you qualify for. Or we may have a seller credit for your closing costs. Now, you could have a husband and a wife, or a boyfriend and a girlfriend, or 2 friends who are buying a house together, and one of them makes a living outside the home and one of them doesn't, and they're both on the loan, and that's just fine. But the income for the one person needs to be connected to that one person and verified for that one person. Hope that makes sense. There are also other kinds of loans, though. If you are an independent, self-employed business owner, for example, rather than getting tax returns and W-2s and pay stubs and things like that, you can do what's called a bank statement loan, where we get 12 to 24 months of bank statements. You need to be in business for more than 2 years, and there needs to be ample cash flow within those bank statements, because that's how your income is qualified. There are also investor loans that you can get for an investment property, for example, that you intend to rent out. And then the income that you make doesn't matter at all, because the DSCR, or debt service coverage ratio, has to do with the profitability of that particular property, not with what you're making in your business in general or what you're making outside of that particular purchase. But each kind of loan does have its own rules and regulations. I've done bank statement loans. I've also done DSCR loans, and both of those require additional paperwork from the business, and they still require documentation. So even though it's a different path, that path has its own requirements. If that's interesting to you and you want to know more, let me know in the comments. I hope this information helps. If it does, give me a like and a follow, and I hope you have a great day.